Hey everyone, hope you're having a good day. My name's Andy. My channel is Finding Value. Today we're going to look at uranium and look to see what the charts look like for uranium specifically. I know we've had some pretty good days in terms of strength in it, and I just kind of want to look at a big broad view of uranium in general. We'll look at some ratios. We'll kind of dive in there and see how good this thing really does look. And I'll talk a little bit about the charts as well and what I see and potentially what I look for in some of this stuff. And again, guys, if you want to know the specifics of the companies that I'm exposed to, you can sign up for finding-value.com. You can come to the Platinum membership question and answer sessions and ask me any questions on how I'm selecting companies, how I'm evaluating these things, what looks good, what looks bad, and why it looks good and why it looks bad. And I do a lot of technical analysis. I do the 3 pillars, ratio investing, which we're going over here, some ratios, chart reading, which is technical analysis. And then you can also look at the fundamentals of the companies. In uranium, it's not so strong since a lot of these companies do not have earnings. So we are going out on the risk curve on some of these kind of small developers, exploration companies that don't have any earnings. What I say with a lot of the members, and when they really get into it and start learning, it's chase cash flows. That is the least risk way. And if you can find in commodities, there's setups that exist that doesn't exist in other sectors. If you're a company that controls the selling price of your product, you shouldn't be trading down 50, 60, 70, 80, 90% off your highs because you control the selling price of the product. Commodity companies don't control the selling price of their products. So you can have very strong companies get decimated to the downside because the commodity is what's determining their margins. And that is where a lot of these setups are. So there's certain attributes I look for in charts, in the fundamentals, where these things can inflect and return massive returns to you over short periods of time. And what that is the market conditions are changing favorable for that sector in a way that is happening very quickly. It's kind of like oil going from $20 to $120, and the profitability of a lot of these oil companies going from losing a bunch of money to making tons of money. And that's the opportunity. And you can identify which ones have the most leverage to the move to the upside based off of fractals and fundamentals. And I go over that. And here we're going to do uranium as a sector just to kind of look at it and see what's going on. So we'll dive in here. We'll take a look at the sector and I'll give you my financial opinions. Now, one thing that you want to look for in uptrends, you get large green candlesticks like this. This is on a monthly basis. So these are months. Each candlestick's a month. You get these large up candlesticks and you get the small down red days. That means you're in an uptrend. It means the buyers are in control and that this thing's going to roll higher. Now, when you come towards an end of trend, you usually start getting these big wicks at the top. A wick at the top is when you trade up throughout the month and it comes back down and you finally close the month here. That's the opening price. So although this is an up month barely, it closed down. Oh, it actually is down. Sorry. It opened here and closed here. That's why it's a red candlestick with the wick at the top. The momentum is shifting and we came back down and we went into a consolidation period. The consolidation period's kind of like, it looks kind of like that little, movement in here. In these consolidation periods, we typically get 3 large humps. Think like 1, 2, and then 3, and this is kind of the hump there. So these are the 3 humps. You get 3 humps, and then you generally potentially either jump out of this or you get one last kind of lead-in pattern, I call it. And this very well could be the 3rd hump in the lead-in pattern. Sometimes they do more than 3, not necessarily inside the actual thing here, but sometimes they can do more than 3. and you get like a couple over here, like a double lead-in pattern before a bounce higher. And that looks like what we're doing in uranium, in URNM at least. I also look at how strong and how big the candlesticks are as we enter the tip of this area. So generally speaking, you get these large pullbacks, and then the pullback comes, and you want to see the size of these pullbacks from top to bottom. From top to bottom, you want to see these pullbacks decrease in size. And you can see that these pullbacks are definitely decreasing in size. And what that means to me is that the selling pressure is subsiding. It means that the sellers are getting weaker and the buyers are getting stronger, or the buying power in relationship to the selling power is changing. That is what every that's what every pattern basically has. It's patterns are more or less just a function of buying and selling pressure and where price movements get stuck at. I mean, that's all the patterns are. So when you come up into something, you're coming up into selling pressure that happened previously in the stock's price. So usually in some other area, and I'm just drawing this, think of it as a blank sheet. As you come into that selling pressure from previous trading, you're going to start to hit some pressure as you go up, and it slows that stock going up. So what we're seeing here is that the buyers are equaling the sellers. That's why we have a pennant formation. And eventually, given the market conditions and money flows, eventually you're going to see a price that moves higher. The characteristic I look for are bullish engulfings, larger green candlesticks than and smaller red selling candlesticks. So we have a bullish engulfing there. I kind of started like, hey, this is changing. Because over here we have bearish engulfing there, a bearish engulfing here, and a bearish engulfing here. So we come up, hit a bearish engulfing, come back down. We're just sitting down in the candlesticks. The opening and closing prices also become a lot closer together, like these small guys there. They're also smaller through here. You can see that these are large and expansive candlesticks, and they usually compress down into what I consider, or what I call, a dead period, where the period is dead, where the buyers equal the sellers, and we basically have a stalemate of buying and selling pressure. You can see it more pronounced in a lot of the individual companies, and we might see it a little bit more pronounced in the daily candlesticks, and this is that dead period kind of. So what you see is you kind of see the lows and the highs, they converge, they get smaller and smaller and smaller, and they converge into a period where it's dead, where you get the least amount of buying and selling pressure. And what we want to see after this dead period, there's a couple of things that I really want to see. I want to see the candlesticks start to change the, we'll call it the green army is what I call it. The green army is large green candlesticks signaling that the buyers and the buying force is exceeding the selling pressure or force. Now, this kind of had a little bit of false. We had a little bearish engulfing there and one here. And I was like, oh, crap. Are we going to head down and do a kind of like a slingshot cheetah? Or are we just going to head on higher? Now, no one is going to know exactly what this looks like. So you have to wait for the market to show you. Sometimes they pull back. They give you where everybody gets short, and then they just squeeze all the shorts as it goes up. Sometimes it does that. It's a false breakout to the downside. The fundamentals and the market conditions, I should say the market conditions, is really what's forcing money into this. It's a combination of market conditions and fundamentals of the individual sector. The individual sector for uranium is massive deficits. And we've got market conditions of an inflationary period with increasing interest rates. And those interest rates are going to slow down. They are going to go flat. But the money's out there, and it's looking for commodity type companies now that the selling pressure has hit bond prices, and we've gone into an upward breakout in interest rates. That's what's causing the rotation of money. But we're seeing the green army come. That's these big green candlesticks that we're starting to see all over the place. That is a positive sign that we are most likely going to move on to the upside for URNM. Now, URNM doesn't really have the history here. We don't have any more history. It only goes to 2020. So What I'm going to do is I'm going to pull up URA because that does have history. URA looks absolutely fantastic, guys. This looks uber strong. So you take a big picture view of URA. And what you want to see in a bottoming pattern is you see a large selling pressure, you see a sideways basing of it, and then you'll see a move higher. Now, if someone's looking at this, they're going to say, oh, you already had your big run in uranium. It was from this bottom here to the top. No, no. The market conditions still exist for this to go higher, in my opinion. Some people will disagree, and they think that we're going to have a crash and everything's going to sell off. And in my opinion, that's all tied to real estate. And I don't think that the real estate market is going to have a deleveraging event where it sells everything off in the markets. So when you look at URA, there's a couple things that I look for in this. Your ultimate bottom was this bullish engulfing pattern with a little wick. So we had a hammer pattern, a bullish engulfing, and we have another bullish engulfing. Now, this guy here, look at all the small selling pressure in here. There's no selling pressure. There's no selling pressure in this little area where I just put my marks. Then we see the green army show up. Here's your green army coming. We came on up. We broke out of this kind of consolidation area, and we've gone and consolidated on top of the area. That's pretty common to happen. Generally, on the right-hand side looks like the left-hand side. We have some consolidation up here, and we consolidated over here. If we were to throw some patterns up here, I mean, this looks so excellent, and I don't know how to say it outside of how I see this, but you can kind of draw that there. You can draw another one kind of down here. It doesn't matter if you cut these off. It doesn't have to be pretty. The prettiness doesn't matter, and the people who are all anal on technical analysis and how pretty it has to be, in my opinion, miss the entire big picture of why this is happening. This is just herd mentality. Usually get a big move. You'll have interest rates move. Something will happen, and people get scared. People start selling off. But this looks fantastic because we've got a large green candlestick this month that's really shaping up quite well. It's breaking out of this downtrend line, and hopefully we can finish the month strong with a very large up candlestick breaking away from this consolidation pattern. Now we've got support underneath us. The support, the way that I draw this is the support comes in this general vicinity here. And I would draw it there, and it comes right underneath this guy here. And we've got support and resistance all in this general vicinity. And that's what this area is here. But if you look back, I mean, we don't have too much resistance above us. I mean, there's a little bit. So we could run quite well after this little consolidation period. Now, if I zoom in and I look at it from more of a weekly candlestick basis, we've got some good moves here, and you can see that the lows. Oh my goodness! Let me grab something a little bit better than that. You could draw obviously that, but that's only really 2 points. What I like to do is I like to do this, and people are going to say, "Oh, that's not technically." I don't really care, guys. It doesn't matter what technically is. What's happening is your buying and selling pressure is literally forming a point. And then we broke out to the upside. I consider this to be a breakout because the majority of the contact points all meet in that general vicinity. So I think we've kind of already broken out. Now, it doesn't mean that we just run higher directly. We very well could come back to a retest move where that is the buying opportunity. Now, I know a lot of people, well, should I wait? Should I do whatever? Sometimes you don't get the pullback there. Sometimes it doesn't do a retest. Nobody knows the future. You can't project it like that. But looking at this, that is, I think, what your return move is this little guy right there. That's a bullish piercing pattern, which we've had another very strong day last trading session where this could run higher to the upside. Very exciting. So URA, if you look at URA, this thing is like textbook awesome. Looks very, very good. Now, we can also look at the Sprott Physical Uranium Trust. That's another one that we look at. Let's go to I think it's called U.UN. So here's the Sprott Physical Uranium Trust. We back out because this one's got some good data. Again, what we're doing is we're looking for resistance areas, and I've got this resistance line. It says need to break this resistance line and hold above it. We hit our head on it. We slammed our head, came on back. And what you want to look for is how far do we pull back? We pull back to this level here. Then we came up, hit our head again, and what happened? We're coming to a higher low than the low down here. So each bang that we hit our head on this resistance level is giving us less and less of a move lower. We dive into it. This is the weeklies. We do have some selling pressure that came up. We've got some nice buying pressure that came before. But there's still some sellers in this thing that we got to shake off before we move higher. And right now, it looks all right. We've been moving sideways. We still have a little bit of selling pressure in here. We just got to get through all this selling pressure that's in there. So, looking at this, it doesn't look bad. And I don't think it looks fantastic for a move higher, but that doesn't mean it can't move higher. Doesn't mean that it can't. I'd like to see a little bit more of a green army showing up and less selling pressure. Less selling pressure is really what I want to see. I want to see small down candlesticks and the big up candlesticks. If we go and we look at our ratios. So our ratios here for URNM, URNM to XLE, and I can kind of tell you what I look for in this. This is just a blank chart. We have a nice big pullback to a very low level. Your dead periods here. Look at bullish engulfing, big green armies showing up. We could see a outperformance of URNM versus XLE. And we're at a level that isn't that expensive historically. I mean, this was really cheap down here, but historically, this is on the cheaper end for URNM. URNM versus natural gas. Now, natural gas has gotten absolutely just flogged, I'll call it. It's gotten smoked. But now natural gas is at the cheap end. And what I'll say here is natural gas actually looks like a great spot to be looking. Natural gas for sure. But URNM, I think natural gas is going to go higher, and I think URNM is going to go higher together. I'll just put it that way. URNM versus XOP. Kind of zoom in there. We do have some good movement in this general vicinity where buying pressure is exceeding the selling pressure. So I would favor URNM in the short term against XOP, and I think we could potentially move higher in URNM against XOP. URNM versus platinum. We've had some pretty good movement with the green candlesticks against platinum. I also think platinum's a pretty good one, but it's looking okay. It's looking all right. URNM versus NASDAQ, yeah, it just looks like we're coming up and squeezing up where we could potentially break and move to the upside. I'd have a vast outperformance of URNM versus NDQ. URNM versus the CRB index. Now, this thing looks crazy, guys. This is basically the Livermore cylinder in a ratio. And I know URNM's pretty volatile, so it's going to overpower the CRB. But it's 1, 2, 3, 4, 5, 6, 7, and then usually you get some big old gigantic move where if this is the accumulation cylinder, we could see a vast outperformance of URNM versus the commodity index. You look at URNM versus OIH, and we are firming up here where we could move to the upside for URNM outperforming OIH. And OIH is the energy service companies. We're going to see if what URNM does. I think it's going to do some crazy stuff, hopefully. We saw the setup in URNM, and it was looking very good. Same with URA, looking very good. And we could see an outperformance of URNM versus OIH. URNM versus REMX. REMX is actually a little bit high. You might see a good outperformance of REMX if this were to outperform there. That might be one to look at, REMX. But URNM's looking solid against most everything. And then URNM versus COPX, we're basically against this. I just threw in a trend line here. And I cut through it, and they're like, oh, you can't do that. Okay, fine, I'll put it here. Calm down. So here's kind of that trend line somewhere in that range. We're right on that support. Maybe we can move on higher where URNM outperforms COPX. And I think COPX looks pretty strong too. Copper is COPX. So URNM does look very good. If we were to look at REMX, just for the heck of it, This is rare earth metals. This one also could be, setting up quite well here for a move higher. This also has a double bottom. Commodities in general just look absolutely ridiculously good across the board. And I think if you take a longer term view, we could see some shorter term weakness at some point. Not saying right now, I'm just saying we could see weakness where we have a recession, things start to slow down, and it grabs some of these things lower. But we also have, that's going to be from the liquidity demand front. We also have on the supply side a lot of deficits in a bunch of different commodities. So it's going to be a supply demand deficit on the supply side and liquidity on the other side, which is, we call that the demand side. And they're gonna battle off here soon. What's that going to look like? I don't know. I don't know if we've ever really seen that happen before, where we've had deficits this large coming up into the mid 2020s. Some of those deficits aren't here yet, but they're coming. And it's going to be a big battle. And if there's liquidity in the system, it's going to go right into commodities, in my opinion, because that liquidity that's out there is going to seek the best risk reward. And the best risk reward, in my opinion, is in commodities by a long shot. All the patterns are lining up with big double bottoms, inverted head and shoulders, depending on what sectors you're looking in. Uranium's looking really, really good. Uranium is one of my favorite sectors. The most difficult way is how to play it. And you're going to be looking at companies, and I know a lot of people, they want to swing for the fence. I'm not going to name any companies here, but if you want, you can sign up on finding-value.com, the Platinum membership, use the word discount in the coupon code. And we can go over those companies on the Platinum question and answer session. We have that next one coming up Sunday at 5 p.m. That is January 29th, I think. Yeah, January 29th. And you can attend that, and you can see the companies that I'm looking at. Now, I don't just go into, one or two sectors. I spread across. I get a pretty good spread and capture a bunch of different sectors. And all I need is one or two of these sectors to really take off. All right, guys, that's what I've got. We'll catch you next time. Give me a thumb up for the content. Subscribe to the channel, and we'll catch you next time. This is Finding Value.